Welcome to Talk Tickers. Today, we're digging into GitLab's latest earnings, and folks, it's a real head-scratcher. You've got a company that absolutely crushed its numbers, but the stock immediately tanked. So what gives? We're going to unpack that contradiction right now. So the call kicks off, and you've got the CEO, Bill Staples, setting a super positive tone. The message right from the top was clear. Hey, we had a fantastic quarter, we're executing our plan, and the numbers look great. But the market just wasn't buying it. In after-hours trading, the stock got hammered, dropping almost 8%. So what on earth happened here? Why the disconnect between great results and a terrible market reaction? Let's get into it. All right, first things first, let's just look at the actual numbers, because on paper, GitLab's quarter was honestly incredibly impressive. They beat expectations pretty much everywhere you look. And I mean, these weren't just squeaking by. These were solid beats. Revenue came in at $236 million, which is a cool $9 million more than Wall Street was looking for. And on the bottom line, earnings per share of 24 cents absolutely blew away the 16-cent estimate. Just a clean, decisive win. And when you look under the hood, the business itself looks pretty healthy. Their dollar-based net retention rate, which is a super important number for any subscription company, came in strong at 121%. That tells you that existing customers aren't just sticking around, they're actually spending more money. That is exactly what you want to see. They're also really succeeding in landing the big fish. Look at this. The number of customers paying them over $100,000 a year, that shot up by a robust 25%. It's pretty clear their strategy of going after big enterprise clients is really gaining traction. But honestly, this might be the best number of the whole report. Free cash flow. They generated $46.5 million. I mean, that is a massive leap from last year. It shows they're not just growing anymore, they're becoming a real cash machine and doing it much more efficiently. Okay, so let's circle back to that big mystery. We've got great revenue, even better earnings, and fantastic cash flow. So why did the stock get clobbered? What spooked everybody? Well, it really boils down to this classic Wall Street story. What you did versus what you said you're going to do. The now looked fantastic. That strong Q2 beat, they even raised their profit guidance. But the later, well, that's where investors started to get nervous. And here's the first major red flag. Out of the blue, they announced the CFO, Brian Robins, is stepping down. And not just leaving, he's gone in just a couple of weeks. That kind of sudden change in the C-suite always makes people nervous, and this one definitely raised some eyebrows. And the second shoe to drop was the guidance. Think about it. You just crushed your revenue number. You'd expect them to raise the forecast for the whole year, right? Well, they didn't. They just kept it the same. To an investor, that can feel like a quiet warning that the rest of the year won't be as good. So, that's the problem. How is GitLab planning to respond? Well, they spent a lot of time on the call laying out their strategic pivot, focusing on a future driven by AI and a completely revamped sales strategy. A huge chunk of the call was dedicated to this, a total overhaul of their go-to-market strategy. They're shaking things up with new teams to hunt for new customers and a bigger focus on product-led growth. But, and this is a big but, they were very clear that we probably won't see the real payoff from this until fiscal year 2027. So that's a ways off. So while they're working on finding those new customers, their existing big customers are still spending big money. Their top-tier product, GitLab Ultimate, now makes up over half of all their recurring revenue. That's huge. It proves their biggest clients are all in on the platform. But the real story, the one they really want you to focus on, is AI. It's all about their new Duo agent platform, and they're using this fancy term, agentic AI orchestration. Forget the jargon, think of it this way. Instead of an AI that just helps you write code, imagine a whole team of AIs working together to manage the entire software lifecycle. It's a much bigger vision. And this is how they plan to cash in. They're shifting from just charging per person to a hybrid model. You'll still pay for the seat, but you'll also pay for how much you use the AI. And it looks like it's catching on. Usage is already up 6 times this year. This is their big bet on the future, and they're aiming to launch it by the end of the year.
All right, let's put it all together. What does this mean for the next quarter? And what should we be watching for on the next call?
So here's the official guidance for Q3, and you can see that slowdown we talked about. They're projecting revenue growth to drop to around 23%. This is them basically telling us, hey, these changes we're making are going to sting a bit in the short term. The caution is clearly baked right into their forecast. Looking ahead, I've got two huge questions. One, are they going to hit that year-end launch date for the Duo agent platform? That's the key to their whole AI revenue story. And two, can they give us any early sign that this big sales shakeup is starting to work? Even a small positive hint would be a big deal. So, our call on this one? We're rating it a market perform. Look, the long-term AI strategy here is incredibly compelling, no doubt, but the near term is just cloudy. You've got too much execution risk with the CFO transition and this massive sales overhaul. For now, that uncertainty just weighs everything down. And that's our take on GitLab's Q2. As always, this is not financial advice.